Today we're going to revisit the yen carry trade because the BOJ has made it very clear they're going to raise their interest rates this week. And what does that mean? It means that the yen carry trade is now not as profitable as it's been. But before we start and go through this and why, let's put in a few data points so that we can see what's been happening and what we think will happen. The first thing is that the yen has been going down. It's gone, basically from 140 up to 157. We're about 155 and a half today, okay? Now, I understand 140, 155, it's normally up, but as Perplexity tells us, that's actually the yen weakening, okay? And we expect when the yen carry trade initially is unwound that the yen will go up. The other thing has been the yields on our 10-year bond have gone from 360 up to 480. Now it's down to 457 in the last couple of days based on Trump not putting on tariffs, which he just announced several times that he's absolutely going to do on Canada and Mexico, which could change this chart dramatically. Maybe, we'll find out. So when you think about the yen carry trade, this is one half that actually says that maybe the yen carry trade is being unwound because we would sell our U.S. assets, bonds and stocks. Stocks have been going up, bonds have been going down, but the yen has not gone up. So if we were selling our treasuries and buying the yen would be going up. It's not actually doing that. Now I'll post this at the bottom so you can read it, or you can stop and read this here. Here's what I want to tell you about the yen carry trade and what you have to pay attention to. Number one is that there are phases to the yen carry trade if it starts unwinding. So the first thing would be is that they would sell securities, either U.S. bonds or stocks, or importantly oil. And if you go back to August when we had the down in the market and the down in the oil, that was partial yen carry trade being unwound, right? Because the oil market, they take their dollars, they buy the yen, they borrow against it, and they go buy oil, okay? So when they reverse that trade, oil goes down and the yen goes up. So the critical factor here in watching all these phases is the yen. When you see the yen start making big moves up, and in our world, let's say from 155 down to 140, okay, that would be the yen carry trade being unwound. Now, I believe we may see 170 on the yen before this is all over, all right? So, number two here, rising speculation that BOJ tightening or adjusting its yield control policy. All right, so what does this mean? It means that the long bond, the BOJ long bond, is 1.18, almost 1.19 today. Their short interest rates are 25 basis points. So they're going to raise them from 25 to 50 basis points. Now the difference, you want to minus it, 50 from 118 is a smaller spread carry than the 25 minus 118. So the yen carry trade itself is getting less profitable. And what are we saying about adjusting the yield curve control policy? Well, remember, central banks can normally control the short end, not the long end. When we try to control the long end, that's when the central banks go out and buy the bonds. We call it QE. So they buy the bonds, driving down the yield. So we know the Japanese have done this. They own they own a lot of their own bonds, right? And so what are they going to do? Are they going to allow their long bonds to go up when they have a very, very fragile economy? Trump may put on tariffs, so they actually cannot afford for its long bond yield to go up. But they're raising the short rates. So what happens here? If they're adjusting this, what's going to happen, right? So, and the U.S. bond yields are rising. We just came down a little bit, narrowing the carry trade's profitability. What do we mean by that? Well, you borrow the money, you come over to America, you buy U.S. bonds, and The yields go up, the price goes down, you're losing money. You own the bonds, you're losing money. So that part is not profitable right now, or as profitable as it was. So they say here, look, investors liquidate U.S. assets, convert to the dollar, back to the yen, thereby strengthening the yen. By selling the treasuries, we drive down the prices and push up yields. Bond yields rise, pressuring our equities and commodities. Yen appreciates as the funds go back and they go buy the yen, and deleveraging occurs across multiple asset classes. Remember, bonds, stocks, and commodities. Everyone uses the yen carry trade. So there's 4 major implications here. You can read them yourself. The only thing I'll say is remember something. There are different phases to the yen carry trade being unwound. So one would drive the yen up, and then it'll go down, the bonds will go up, and so forth. Everything has a phase. Understanding your phases as people deleverage and move and get rid of the yen carry trade, that's going to be the people who make money. So this woman who wrote this article then tells you, okay, in the phases, what can you invest in? So I don't know if she's right, wrong, or indifferent. She's basing it upon the phases of the yen carry trade being unwound. This is something you have to make up for yourself and understand what's going on. And you can read the summary here and understand what's going on. So what should we watch here? So the BOJ is going to raise their rates, and they're going to go up to 50 basis points. Then we'll have to watch the long bond, which is around 118.5, 1.18 and a half. And if that starts moving up, to the Japanese, they don't want that, okay? It slows down their economy. Do they start QE up again? I don't know. If they don't, then there's going to be issues in that the yen will continue to go down. So I don't believe they're going to do the QE, and that will force the yen down. And that's why, as anyone follows this channel knows, we basically have about a 170 target on the yen. And when it gets there, what does the BOJ do then? Do they raise the rates by 25 or 50 basis points to save their currency? I don't know. We're going to find out, and I think we're going to find out fairly soon. The next is commodities, and specifically oil, because all these oil traders, they use the yen carry trade, and we saw that when oil got crushed in August and the market went down. That was the yen carry trade unwinding. All right, so we just had oil move up from about 70 to 81. Today it's down to 75 on Trump's, drill baby drill. But the point is it went from 70 to 81 for geopolitical reasons. All right, so think of the phases again. You could have the commodity market move out of the yen carry trade, the oil market move out of the yen carry trade, thereby driving down oil prices temporarily. Remember, it only lasted a day or two in August, and then oil would go back up because of geopolitical reasons. So if you're a trader versus an investor, which way do you go? How do you invest? This is something you have to make your mind up on. And finally, I like to point out that the whole world is interconnected, and they're all through these carry trades. We've discussed the renminbi carry trade. There's the oil carry trade. There's the yen carry trade. And of course, any other country who had higher yields than the yen, there's some portion of a yen carry trade there. So you could have done the yen carry trade with the British pound. You could have done it with Turkey, okay? That'd be dangerous, obviously, but people could do it that way. So, what do you think? What are you going to watch? What's going to happen here? Tell me in the comments and like and follow. Thank you very much.